In order to avoid loopholes in tax collection for wealthy immigrants, China may begin to levy a citizenship renounce tax. Abandoning nationality tax or passing it, giving up Chinese nationality will be taxed. For a long time, if overseas Chinese want to join a foreign nationality, the mandatory rule is to give up Chinese nationality. Under the existing immigration regulations, Chinese can transfer their assets and wealth abroad when changing their nationality. There may be some cases of changing nationality for tax avoidance or evasion. In order to avoid this situation, at the recent People's Congress, a representative of the National People's Congress proposed to modify tax regulations and increase the abandonment tax. With the rapid development of China's economy, the number of wealthy individuals continues to grow, but some of them migrate for the purpose of tax avoidance and transferring assets and wealth abroad. At the same time, compared to developed countries, China has loopholes in tax collection and management for wealthy immigrants. Taking Australian Chinese as an example, the first thing to become an Australian citizen is to cancel their Chinese nationality. If the revocation tax takes effect, not only will they submit a withdrawal application, but they also need to clear their tax status with the tax authorities when canceling their Chinese nationality. How to specify the abandonment tax? The expert's suggestion is to learn from some regulations of Western countries, such as the United States personal income tax law to strengthen the tax clearance of abandoned individuals and Germany's strengthened implementation of the abandonment tax during and after the event of personal income tax collection and management. The most important point is tax calculation, and the collection of abandonment tax may adopt this method. If a Chinese citizen withdraws from Chinese nationality, all property at the time of withdrawal will be deemed to be sold at fair value, including property, stocks, equity, bonds, personal belongings such as cars, and any gains or losses incurred as a result will be subject to personal income tax. In addition to levying abandonment tax, experts also suggest strengthening the information collection function of the CRS International Tax Information Exchange System. The purpose is to understand the data of Chinese citizens' overseas financial accounts and income information overseas. The focus is on cracking down on tax evasion in the Immigration Plus Offshore Trust system. CRS Global Tax Information Exchange System, Australian Chinese must attach importance to. In addition to the abandonment tax, experts emphasized the CRS Global Tax Information Exchange System. Perhaps many people have an impression of it, and some still have a vague understanding. So what exactly is CRS? The full name of CRS is Common Reporting Standard, which means Unified Reporting Standard. The so-called standard refers to the standard for automatic exchange of tax-related information in financial accounts. These account information will be exchanged between various contracting countries through the CRS platform. The contracting country will exchange information on domestic residence deposit accounts, custody accounts, cash funds or insurance contracts, annuity contracts, etc. to improve tax transparency and combat cross-border tax evasion. Which Chinese community is most affected? 1. Overseas population with financial asset allocation. 2. People holding shell companies overseas for investment and wealth management. 3. People who have purchased large life insurance policies overseas. 4. Overseas family trust groups have been established. 5. People who establish companies overseas to engage in international trade. Due to CRS's focus on cracking down on cross-border tax evasion, it will become increasingly difficult for many Chinese billionaires or bosses to transfer assets through offshore accounts in the future. Through the exchange of powerful financial information and intelligence, tax authorities in various countries can better understand the true income situation of overseas residents. At a distance from Australia, Australian ATO can regulate the tax status of all Australian citizens, and as long as they are Australian taxpayers, all assets, including overseas assets, are under regulatory law. At the same time, with the recent implementation of China's CRS, many Australian Chinese assets in China will also be exposed to ATO. Similarly, the Chinese Tax Bureau will also have a clear understanding of Chinese assets in Australia. Many Chinese people who have immigrated to Australia have not filed tax returns on real estate sales, stock investment income, bank interest income, pension income, etc. in Australia. Similarly, income in Australia has not been declared to the Chinese Tax Bureau, and the decision is to avoid taxes at both ends. Now that there is the abandonment tax and the regulation of the CRS Global Tax Interaction System, it will no longer be possible to avoid taxes at both ends, but instead, it will become tax payment at both ends. Although the abandonment tax has only just been proposed and has not yet taken effect immediately, it must be an important part of improving China's tax system. For Chinese people who want to avoid taxes through immigration, the introduction of the abandonment tax has dispelled almost all their thoughts of tax evasion. Another point is the CRS Global Tax Information Exchange System, which can make the income of Chinese residing overseas transparent. Both overseas and domestic income will be clearly understood by the tax authorities on both sides, and tax avoidance on both sides is already impossible.